Let's talk to Tesco then, and starting on that international front.
So there are lots of internationals to pick, and of course we must talk about the online threat at some point, but yes, these are the ones we've picked out, 2 European players.
So Tesco is a UK retailer, as Paul says, with a 25% market share in that country, founded in 1919. Wow.
Right, so it's I think well known for its brightly lit, well-stocked stores. It invented some of the concepts like in-store brands and premium brands. The market capitalization of this one and the one which comes after it, Carrefour, which is French, are about the same. We're talking about £15.5 billion in this case.
Absolutely. PE of 95.8. Pays no dividend.
There's a reason for this. Chris will tell us
Chris,
what's going on.
Let's get into the PE.
Yeah.
Just under 100.
This company has experienced a lot of headwinds in the past few years. I mean, there was the subject of an investigation by the fraud office in the UK involving schmuckles with what's called confidential rebates and all sorts of things. They got a new CEO, Alessandro Bellini, I think is his name.
So Lewis was the guy Dave Lewis was the guy, he's been moved aside.
Yeah. And look, I think from this point, it's looking like their upward trajectory is looking an awful lot better than it was a few years ago.
Is that being reflected in the share price graph? Let's have a look at that, Chris.
I think to an extent, yes. You can see the precipitous fall they had in the past few years as I say, they were facing some very, very severe headwinds. Also, their forays into foreign parts were not particularly successful. Didn't do well in China, had to get a JV eventually. And they've had mixed success in parts of Europe and in the US.
How long has the new guy been in the hot seat?
1st of March.
1st of March.
2 weeks.
So we can't expect him to have reworked the strategy and put the company onto a firm path.
But look, there are 2 issues just to put right out there. The first is that it's in rebound recovery mode, yes, from these accounting related scandals, and what they normally do in those cases is they kitchen sink it, so they sort of write down everything. It had to do with partly rebates and also some accounting irregularities, recognition of revenues, that sort of thing. So that's a problem. The second issue is around loss of market share, because in the UK, as far as I know Chris visits the place a lot more often than I do, stores like Aldi and Lidl have come up and are chowing them, and those are sort of German discount retailers. Explain to us who those are and what it means.
Okay, Aldi and Lidl, they're some of the biggest retailers in the world. And in recent years, they've gone into the UK. Now, they were perceived to be low end of the market, but it was only once you got over the stigma of going through the portals and seeing, well, you know, some of the stuff is actually quite reasonable. And they have a wonderful model that means that if the manager, for example, isn't too busy, he's deployed into stacking shelves. So they keep the guys busy, they pay them well, and their margins are actually quite high. But as you say, they've been chowing
Excuse the pun.
chowing, the market share of Tesco. Tesco has been the leader with close on 30% market share in the UK
huge.
for many, many years.
Yeah.
I mean, the number 2 is Asda, which is part of the Walmart group, but about half the market share. So obviously they've been targeting these guys. But having said that, you know, if you look at the strategy they've adopted over the past few years, but the past decade or 2, in fact, they've been segmenting their offering. They've still got their big stores. Some of them are open 24 hours a day. They're hypers and stuff like that, but they've been going more and more into the convenience stores, the Tesco Expresses, things like that, to compete head on with what you've described, the Aldis and the Lidls. Aldi and Lidl is still a formidable, they're 2 different companies, both German, and it's funny when you go into them, it's difficult to tell the difference between the 2. It's a very, very similar type of offering, but it's so clever, and they're taking big pain.
Given the history of Tesco, I mean, dating back to 1919, and the fact that it has enjoyed such a substantial market share, do you think that this can be a recovery story?
I think it can, and I think they're doing all the right things. A fellow called Jack Cohen has started this thing back in 1919, and you know, it is a great operation. It covers the entire market, as I say, top end, middle and lower end. So it's you don't necessarily feel that you're being compromised when you go into this place. In other words, there's no sort of stigma attached to going into a Tesco. So I think it's got all the fundamentals, all the intrinsics are in place. What it needs now is a clear strategy and new management.
That sounds good, but what about the Brexit thing? No better person to ask than you. I know you've been following the Brexit thing. You've been expressed your views occasionally about what's going to happen with Scotland and so on and so forth. If Theresa May presses ahead with Article 50 and there's no deal negotiated and there's potential downside risk for UK GDP, isn't that potentially a concern? Because if GDP and the British economy generally crimps just because of a loss of confidence and anxieties around a hard Brexit? Couldn't you see a softening of sales and a concomitant problem from a margin point of view?
I think you're right, and as I said to a client presentation last week, the British electorate and the infinite wisdom did the second stupidest thing they ever did. The most stupid thing was when they didn't elect Winston Churchill after the Second World War, put a clerk called Clement Attlee in as Prime Minister. But be that as it may, I think Brexit is going to be bad for the UK economy. For the next couple of years, probably okay. There's still a lot of uncertainty as to what's going to happen. And I think Prime Minister May will find it increasingly difficult to find new trade flows to compensate for those in Europe. So coming back to your point about Tesco, will it necessarily be a loser? Not necessarily. Look, it is geographically diversified. As I said, they haven't been too successful in many of the jurisdictions into which they've gone. But that doesn't prevent them from doing so in future. And don't forget, I think the currency, the pound, will take a lot of the strain of all of this.
Hot or not on Tesco?
I'm still hot on Tesco. I like this one.
Paul?
I'm going to tip not hot.
You're
just
not
about
gonna
the
follow
caution
in-
with regard to the general macro environment. I mean, I admit that sometimes it's wrong to make assumptions about companies because of macro determinations, but in this instance, I'm going to go with cautious.